Welcome to the Passive Investing in U.S. Multifamily Show, the podcast that provides valuable insights on passive investing in U.S. multifamily properties. If you're a passive investor looking to invest in multifamily properties, then you've come to the right place. In the first episodes, we'll introduce you to the concept of passive investing in U.S. multifamily properties and help you understand why it's an excellent investment option. We'll also provide you with some tips on how to get started with passive investing and what to look for when investing in multifamily properties. We'll also share a quick background on us, the host.
Our goal is to help you make informed decisions about your investments and to provide you with the tools you need to succeed as a passive investor. We'll be bringing in experts in the field who will share their knowledge and experience with you. Throughout the podcast series, we'll be covering a wide range of topics related to passive investing in the U.S. multifamily properties. This will include the acquisition process, property management, financing, and much more.
We want this podcast to be a valuable resource for you, so we encourage you to subscribe and join our community. We'll be sharing regular updates and exclusive content, so you don't want to miss out. So sit back and relax and enjoy the first episode of Passive Investing in U.S. Multifamily Show. We hope you find the information helpful and informative, and we look forward to helping you achieve your investment goals. So a little background on ourselves and myself, Jefferson Ortiz. So growing up in Canada, right after high school, I ended up getting into the insurance world, where I became an insurance broker and had a portfolio of I have $3 million in book of business in about 3 years. So I learned a lot in my role as an insurance broker, both from managing people, managing a portfolio. This gave me a lot of confidence when I went into the multifamily, but some of my challenges that I struggled as an insurance broker was a lack of time, a lack of clarity, and not being able to grow. And if you're not growing, you're dying. So that's part of the reason why we're so passionate about helping other folks get out of the rat race and find an alternative vehicle, in our case being the apartment space. And we also are very passionate about being able to make a big impact on other people's lives. So that's a little bit of background on myself. I also have two boys, and I'm also married. Also currently living in Canada, Hamilton, but we're going to be transitioning into North Carolina, specifically Charlotte, where we're going to be able to do a lot of more asset management, meeting with brokers and so on. So we're very excited for this. And yeah, it's a little bit of background on myself. So John can take it away.
Absolutely. Thanks, Jeff. I myself went into international trade and logistics, which is the corporate world of transportation, purchasing, and an A to Z B2B business. I worked in Toronto for about 2 years in the corporate world, doing air freight operations and learning everything about system processing, operations, standard procedures, and all that good stuff. And it taught me a lot throughout the time being there. Definitely a lot of heavy work throughout the years, some stressful situations in the job with, time management, heavy workload and all that good stuff. And we ended up kind of looking out for a vehicle to exit that life of just constant work, constant, sweating and trying to put some food on the table. But we ended up, getting into multifamily real estate and wholesaling and being able to have a different life for ourselves and being able to teach this to other people so that they can make better financial decisions, have a better financial clarity in the future, how to make your money work for you, and how to think as an investor to help you in the future, instead of being more as a consumer, which is what everyone is taught what everyone's taught growing up, is essentially how to be a consumer, but not how to do your taxes, how to invest, and just grow your future and not be working 9 to 5 for the rest of your life, essentially. But yeah, that's a little bit background about myself. And yeah.
So now to touch base on how we are where we are right now is once we understood that there was another vehicle that we wanted to pursue, we fell into wholesaling. So that was back in 2020. We fell into wholesaling. We hired a coach, a mentor that really took us under his rope. So we're big believers in mentorship. We're big believers in paying for education and paying for other people's time. So once we did that in 2020, 2021, we scaled our wholesale business to complete over 40 wholesale deals in our first year. Now, during that time, we learned a lot of very valuable lessons when it comes to, so we went over 40 different closings throughout that year. So that was a big learning curve for us when it comes to talking to lawyers, deposits, due diligence, and so on, and much more. And we were able to structure a lot of really favorable deals for our partners or the people that we assigned the deals to, and they made a ton of money. So it was a very big year for us that really led us to also start purchasing our first property, which is a legal duplex, and where I was house hacking it at the time, renovating the other unit. And the time I was there living with my wife, we moved out about an hour away from the city, out in Fort Erie. So we were there, we were living on the one unit, we renovated the other unit, moved into the other unit. And so we got the opportunity to experience renovations, experience managing contractors, managing the projects themselves. And through that time, we also purchased a few other multifamily properties. We scaled up to about 20 units. And what we found is that every project that we took on, whether it was a duplex or triplex or smaller properties, they took a lot of our time. And we wanted to scale up to the bigger multifamily properties, apartment buildings, multifamily, but we just didn't know how. So what we did is we went back to our original, what we did originally, which was finding a mentor. Now, we found a mentor or a mentorship group for multifamily properties in Canada. And they really taught us and helped us get rid of our limited beliefs, and that we needed to use our own capital. And we learned about syndication, we learned about multifamily, we learned about how to raise capital, how to have a brand, and much more. And it also allowed us to be part of a really good community that supports you, that is always encouraging you, and is doing a lot bigger deals. And during our time there, we really fell in love with the syndication model. More particularly, we fell in love with the bigger assets, right? Because every asset, whether small or big, takes the same time and energy. So why not go after the bigger building? Now, during our time, we were looking for properties in Alberta. We looked for properties in Saskatchewan. But some of the things that we didn't like in these markets were the metrics for the economics behind it, which is something really big, important thing that we look in the multifamily space. And so we ended up actually focusing our time and energy in wanting to go to the US for many reasons that we're going to go over in this podcast. But one of the main reasons was the type of asset classes that they have in the US, 100 plus units, garden style, beautiful, amazing amenities. Also, the landlord rules is a very big reason why we wanted to go into the US. And then also the economies of scale, right? So with the larger multifamilies, we're able to scale a lot faster because we have a whole team in place that is managing these assets. But we'll go into it a little bit more in the podcast. So during our time, when we joined this other community in the US, we got the opportunity to participate in a few different projects. One of them being 137 units in South Carolina, and where we focus and we use our knowledge and our expertise and focus a little bit on the raising equity and asset management aspect of the syndication. And then we also participated in a few other projects. One of them being in New York. It was a 60-unit apartment building, and also a conversion project that one of our partners brought to us, which is a hotel that is being converted to an assisted living. And same thing with these projects, they were just backed up by a really strong professional team. So it allows us to give us confidence when we're going into these projects. And our most recent project that we're currently raising equity for at the moment is a 236-unit apartment complex in Decatur, Atlanta, Georgia, MSA. Amazing project, amazing returns. This is for 506C, so accredited investors only. But that's a little bit about how we are and how we got into where we are right now. Anything you want to add, John?
No, you pretty much touched all good points there. So
a little background on ourselves, the host, who we are, and now we'll get into a little bit more why in the US, why multifamily, and so on.
hello, everyone. We're going to be talking about why investing in US multifamily assets versus Canada. To start off, let's talk about why multifamily properties are such a great investment opportunity with a stable demand for rental properties and potential for cash flow. Multifamily properties can provide excellent return for passive investors, plus with extremely great tax benefits and the ability to leverage debt, investing in multifamily properties can be a powerful wealth building strategy for you. According to a report by the National Multifamily Housing Council, the United States has a larger multifamily market than Canada, with over 43 million rental units in the US compared to around 3.3 million in Canada. This larger market may provide more opportunities for investors. And again, let's let's look at those numbers and talk about them a little bit. 43 million rental units in the US compared to Canada, which is 3.3 million. That's over 95% difference. So this is, again, why we love investing in the US and the inventory that you have available compared to Canada. The United States has a more diverse range of multifamily properties, including high-rise apartments, garden apartments, townhouses, different kinds of complex amenities. And this diversity may allow investors to find properties that better fit their investment goals, because there's so many different kind of asset classes. And we'll talk more about that in a different episode, where we'll break down the different kind of asset classes that there is and how they all diverse in investment returns. Now, another point is the United States has generally higher returns on investment in multifamily properties. According to a 2019 report by the CBRE, the multifamily properties in the US have an average total return of 7.5 compared to Canada, which is 6.4. And I'm going to assume those numbers are probably a bit higher in this year in 2023. But in Canada, when we were underwriting deals, there were usually negative cash flow because of the rents being so low and the sellers expecting more for the property than what it actually supports. Another thing that really kills your underwriting and your reserves is cash for keys. Here in Canada, you got to reserve cash for keys if you're planning to turn over units. Now, in the US, why we love the US, when we're underwriting, we're acquiring large apartment buildings that are 150, 250 units plus. Even on year one, you're still able to cash flow from day one while supporting low rents. And throughout the process of optimizing the building, you're able to increase that cash on cash return and leverage a higher return for your investors throughout the lifetime of the investment. Now, another thing that we love about the US is the 1031 exchange is available when selling an asset. Now, for anyone listening who doesn't know what a 1031 exchange is, essentially it is a tax deferment strategy that allows an investor to defer paying capital gain taxes on the sale of an investment property by reinvesting those proceeds into another similar property. So you can take your gains and your capital and invest it into another asset without having to pay any capital taxes gains, which I believe here in Canada, they just recently bumped the number of how much you're paying when you're doing capital gains taxes, and also a new flipping tax. So the US just provides a better all-around investment opportunity when it comes to taxes, landlord-friendly state rules, economics, inventory, and we'll break that down through our episodes in the coming days here at the podcast here that we're doing today.
Okay, guys, so now we're going to be talking about why passive investing and what are some of the benefits of passive investing. So with passive investors in multifamily real estate, they can benefit from passive income streams generated by rental cash flows and property appreciation. Now, with passive investing in multifamily, it allows investors to own a stake in a large and more diverse real estate portfolio that they might not have always been able to afford on their own. Now, unlike active investing, passive investments in multifamily real estate requires minimal effort and time commitment, allowing investors to focus on other areas of their life. Could be hanging out with their family, hanging out with friends, and enjoying the true benefits of life. Now, passive investors in multifamily can also benefit from the potential tax advantages, such as depreciation and deductions on expenses. Now, lastly, I want to say is, in general, passive investment in multifamily real estate can offer investors with long-term wealth creation and portfolio diversification, which are some of the reasons why we are so passionate about passive investing and why we want to teach other passive investors how they can reach financial freedom. Now, let's talk about our team's expertise in multifamily investing. Now, our team has over 20 plus years of experience investing in multifamily properties and has a track record of success. Now, our team consists of a key principal underwriter, acquisitions department, division and asset management division. Now, we also have a thorough vetting process for properties, and we only invest in opportunities that meet our strict criteria. By partnering with our team, you can have the confidence that your investment will be managed with care and diligence. We on average are looking at about 100 to 150 plus opportunities before we find the right opportunity for our investors.
So, how can you get started investing with our team in multifamily apartments? It's easy. First, visit our website, ortizequitygroup.com. That's ORTIZ, equitygroup.com, and sign up for our investor list and get a free copy of our ebook. You can find this on our website, and we'll send you updates on our latest investment opportunities, along with a detailed financial and market analysis. Once you find an investment opportunity you're interested in, you can invest with us through our easy-to-use platform, and our team will be there every step of the way to help you answer any questions you may have, and we look forward to helping you reach your financial goals.
That's it for today's episode of Passive Investing in U.S. Multifamily Show. We hope you learned something new about U.S. multifamily investing and how our team can help you achieve your investment goals. If you have any questions, don't hesitate to reach out to us through our website. And don't forget to subscribe to our podcast for more valuable insights on passive investing in U.S. multifamily properties. Just Jefferson Ortiz signing out.